Hi folks, how you doing? This is Iqbal with Nvidia Daily Analysis. Today we will discuss Nvidia stock price and we'll try to make an assessment for tomorrow and rest of the week using technical charts and fundamentals. I will present my analysis on unemployment rate and non-farm payroll data due this Friday and also its potential impact on Nvidia and overall market. I will upload my Excel sheet to my Patreon account so you can access the sheet if you are a Patreon member. You can find the link of my Patreon account in the description. Now, let's get started with NVIDIA analysis. You see NVIDIA stock chart for today on your screen. NVIDIA opened at 884, it made a high 903, it made a low 884, and it closed at 889. That is 0.55% down. So this is in line with my yesterday assessment. I predicted that Nvidia is trying to build momentum to go further down, but this movement will be very slow. So if you compare today's closing price with the yesterday closing price, so this is a little lower than yesterday. So yesterday it closed at 894. So this morning Nvidia tried to go up, but it did not have enough momentum to go further high. So it had to come down. We'll discuss in detail when we will be talking about NVIDIA technical charts in a bit. Now moving on, 5-day 4.4% down, 1 month 4.3% up, and 6 month 102% up. So you see the steep slope, the last 6 months chart. So after making a high, you see it lost momentum. It's almost no direction as of this point. See, trying to go down a little bit, but not enough momentum to go up. Okay, so I'm guessing it should make some correction before the next earning release. Regarding my new position, I had limit buy position at 855 today as well, but I could not get it because Nvidia did not go down to that level. Tomorrow I will place another buy position after taking a look pre-market session. I already bought some shares at 915. I'm holding it because in my opinion, Nvidia will bounce back before next earnings. Now, let's take a look technical charts. You see Nvidia 30-day 1-hour interval chart on your screen. The lowest point is 667, the highest point is 962 in last 30 days. RSI is at 46. At this point, it's directionless. It doesn't tell Nvidia should go up or go down. Now let's take a look 30 minutes interval chart. In a 30 minutes interval, RSI is at 44. The same story, RSI does not tell at this point Nvidia should go up or go down because it's neither oversold nor overbought at this point. Now let's take a look MACD. Now I have MACD here in a 30-day 30 minutes interval chart. You see MACD line is touching the zero line and going in parallel since last few days. This tells that Nvidia is moving sideways, not enough momentum to go in either direction. At this point, since Nvidia is in a consolidation mode, I still have the opinion that Nvidia should go further down. Now let's take a look 1-hour interval chart. In a 1-hour interval chart, MACD showing the same behavior. It's below zero line and going in parallel. Trying to build some momentum to go further up this morning, but it did not have enough momentum to go further up. Now let's take a look Fibonacci levels. So now I have the Fibonacci levels starting from 0% to 100%. The lowest is 667, the highest 962 in a 30 days hourly interval chart. My support levels did not change from yesterday, still at 892, and after that is 849. The Nvidia is still moving around 892 support level. So if it gets some momentum, it should try to test 849 level. As I said yesterday, I was not expecting yesterday Nvidia to touch 849 level today, and it did not touch it. So tomorrow, maybe Nvidia can go further down, but I'm not expecting Nvidia to touch this level tomorrow. We'll see what happens tomorrow. On the upper side, The strong resistance level is 962. If Nvidia gets some momentum, it should try to test that level. At this point, I'm not seeing Nvidia to go high to test this 962 level this week. Now let's take a look some news regarding Nvidia. Most of the news are talking about Taiwan earthquake. They're talking about supply chain issues because of this earthquake that may disrupt the supply. Talking about this news, saying the same thing. The infrastructure is one place, the Taiwan, the dangers of the disruption of supply chain can be high. Also, this news that says that Taiwan earthquake can pull down chip stock, including Taiwan Semi. So that's a possibility, right? If the damage is high, then definitely it can impact the supply chain and also the Nvidia and other AI stock prices because Taiwan is a big supplier, right? So we'll see in next few days what happens. As of this point, Nvidia did not react much to this earthquake. Still trading around 890. Now let's take a look other AI stocks. We see SoundHound is down 6%, AMD is up 1.1%, SMCI is up 0.56%, Nvidia down 0.55%, Avago up 1.83%. Today I wanted to buy Amazon. I placed a buy at 177, but it did not come down to that level. To me, Amazon may be a very good stock before the earnings if it drops around 175, 176. So I'm still waiting. Now let's talk about unemployment rate and non-farm payrolls. You see these tables on your screen. I summarized the historical data on non-farm payroll on this table and also unemployment rate on the other table. And also did some calculation to come up with the percentage surprise from the actual versus forecast for last 12 months. I also calculated the S&P price change on the same day after the non-farm payroll data release for all the 12 months. So starting with the non-farm payroll, last 12 months, so most of the numbers you see greens. The greens are telling that the actuals came higher than the forecast. Now let's evaluate the effect of the non-farm payroll data on the S&P price change. When the economy is moving on the direction of the rate cut, then non-farm payroll data, if comes higher than the forecast, is not a good sign because that would tell that the inflation should go up in the future and that will delay the timing of the rate cut. The last time non-farm payroll came higher than the forecast and market reacted negatively because it thought that this might increase the inflation and that should further delay the rate cut timing. And before that, last three green, you see, actuals came higher than the forecast, but market did not react negatively. And even before that, when it came lower than the forecast, market should have reacted positively, and it did. And even before that, the actuals came higher than the forecast, and market did not react negatively. It should have. So this tells me that there is no linear relationship between non-farm payrolls data and S&P price change. So sometimes market react and sometimes it does not. So we cannot use non-farm payroll data as a predictor for the S&P price change at this point. And the latest forecast is 205K, a little lower than the last month's forecast, which was 198K. See, the actuals came higher than the forecast last month. That's why we're thinking that the forecast of this cycle should be higher than the last cycle. Now, comparing with the unemployment rate versus the S&P price change, you see last time unemployment rate came higher than the forecast. Last time you see 3.9 versus 3.7, it came higher than the forecast and market reacted negatively. So if unemployment rate goes down or lower than the forecast, it's not a good sign for the market when we are expecting the rate cut to happen because that would give signal that more people are getting employed, so the inflation should go up, right? And that can delay the rate cut timing. Okay, so all these three numbers, the green came lower than the forecast, and that was not a good sign for the market, and market should have reacted negatively, but it did not. So this tells that there is no linear relationship between unemployment rate and the S&P price change at this point. So unemployment rate also should not be the clear predictor of the market up or down at this point. That's how the historical data suggests. But you will still see some analysts talking about, man, if unemployment rate goes down, that won't be good for the market. Market would react negatively. Market would go down, blah, 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 right? Without digging into the data analysis and try to connect the data points. So that's where the power of data analysis comes in. You can use the historical data to find the correlation between two or more variables, right? Then here you see that even if theoretically speaking, non-farm payroll high should negatively affect the S&P stock price in the expansion economy, right? But looking at the last 12 months, there is no linear trend, right? And same goes with the unemployment rate. The unemployment rate goes down, should negatively affect S&P. Sometimes it did, but not always, right? So there is no linear relationship between unemployment rate and the S&P price change at this point. So I'm gonna load this sheet onto my Patreon account. If you are a member, you can access the sheet from there. If I summarize today's discussion, Nvidia does not have a strong momentum to take it further high and is still trying to build some momentum to go further down. Another variable now is the impact of the earthquake on the supply. The impact of the earthquake at this point on the supply is still unknown, but if the news comes that says that supply disruption is likely to happen and Nvidia and other AI stock will face supply shortages or supply challenges this quarter or next quarter, then this should bring Nvidia stock further down. At this point, they are just speculations that the supply disruption is going to happen. But if some data comes in that says that the damage is this big and that says that the factories are closing for those many days and the inventory is falling, things like that, right? Thank you so much for watching. Talk to you more tomorrow. Take care.